Okay, so now we are ready for social accounting matrices. In the first lecture, we discussed the input-output tables and why CG models are very important. So, in order to run a CG model, we need a numerical, because CG model is a numerical model, we need a database. And the database we're looking for is the social accounting matrix, which is an extended input-output table. And you will see in this lecture today that the SAM itself is another description of the economy and how it works, but it basically serves as the necessary database that we need for this CG model. We haven't talked about CG model yet because we need to elaborate a bit more on a simple CG model, which we will do after working on the SAM. SAM is the social accounting matrix. But I want to do that after we briefly look at how to cast the database and some simple equations on the GAMS software. So next week we're going to look at GAMS software. So we're going to slow it down a little and we will get away from the theoretical discussions which we have been doing so far, and we will look at the computational aspect, and we will look at how to write the programming code, because that's what we're going to need when we write the equations. So once we know how to write the model code, then we will get back to the basic CG model. The basic CG model, it will be a simple model at the beginning, and then we will make it more complicated. So the simple CG model is in chapter 2 of the textbook, but we will do that later on. So before CG, let's take a look at the social accounting matrix, or SAM. So I will make use of the explanations in chapter 4, which I have distributed earlier. In the textbook, chapter 4, there is a very nice overview of how to interpret the social accounting matrix and how to view the figures, what they mean, and what we should understand from such database. As I have mentioned previously, a very detailed, if possible, of course, detailed and consistent data set is the most important requirement for CG modeling. And these data should belong to the real world. So before doing that, let's start working on another hypothetical economy where there are only two production sectors, in this case bread and milk. After we understand the simple framework of the SAM, we can look at the real world examples. In this case, I have prepared a couple of tables, social accounting matrix figures for Japan, which is available from the textbook, and for another country, which another developing country, which we will see later on. So today with this lecture we will be done with two important aspects of one of the two important aspects of CG modeling. One aspect of CG modeling is how to prepare and how to use actually and understand a consistent database, and then the other part is modeling a methodology. So today we will be done with the first part. The second part will be the rest of the course. Alright, so what you see here in this slide is a hypothetical social accounting matrix. As you see in the text here, we need a social accounting matrix to calibrate our economy. Calibration means verifying that the data really fits the model. So from the beginning, we need a consistency. So the SAM, as we will see in a minute, is a very consistent database. So this consistency derives from some mathematical properties, characteristics of the what you see the matrix here. If you're not familiar with mathematical concepts, matrix is a table like this with rows and columns. every row and every column in this matrix, social accounting matrix is a matrix. So it is a square matrix, which means the same number of rows and the same number of columns, you see. Um, every cell, every row and column combination here, every cell has a meaning. So we will go over each of them one by one, and I want to make sure that you understand all the figures, all the numbers you see here. And at the end of the lecture, you will realize and you will notice that we're not talking about anything other than the circular flow diagram, but in a more complicated form. So, what exactly is a SAM? A SAM is an economy-wide table matrix, as you see here, but it is actually a device which captures all interdependencies between institutions and sectors in an economy. So by institutions, we sometimes call these institutions actors. So many of the figures you see here are actually existing also in the input-output table. So the SAM will look very much like an accounting type double entry bookkeeping. Well, maybe that's why we call it social accounting system, because in double accounting method, in double entry bookkeeping method in accounting, basically every item appears twice, right? So there is this on the asset side, on the liability side, or something like that. You will see that there's always a balance between the accounting figures. So a sum is something like that. So basically, a sum is like a balance sheet of an economy. It is not, but actually it looks like one. So it is a very closed form of an accounting system. So this means the general equilibrium of the economy will be reflected in the social accounting matrix here. So basically what we're doing is we are putting the general equilibrium into numbers. You remember the input-output table. The input-output table represents the transactions across the economic sectors, and also this is the supply side, you remember, and on the demand side it also takes account of the final demand components like investment, government spending, private spending, exports, imports. So and also payments to factors of production as and also taxes. So these are all about production and how these produced outputs are shared between final demand and also as inputs in the production of other sectors. So that was the input-output table. The input-output table is a bit different. It doesn't look exactly like this because this one is a square matrix. Square matrix, it is built on the input-output table. The idea is the same. You see there's here production factors, you see households, you see so many things. The idea the idea may sound similar to you, but the presentation of the transactions, all the transactions in an economy in the social accounting matrix is a bit different than the input-output table. The input-output table usually considers production linkages, right? But for the social accounting matrix, how the economic actors, households, government, how they receive their income and how they allocate this income to other expenditures, to expenditures and other things, including savings, is captured. So, in that sense, SAM is built on the idea of input-output tables, but it further extends it to take into account of such such linkages or feedbacks in the economy. So every transaction in the economy is included in the SAM, and here we see a very simple form, but in a minute we will be looking at a very detailed form. Well, basically, all these numbers you see in the SAM is what we call a snapshot of the economy. It's like taking a picture of the economy at a given point in time. Remember, these data belong to one time. It's not time series. It doesn't belong to multiple years. This is one economy. The picture taken of an economy at one point in time. These data belong to 1 year. In this case, let's say it belongs to the year 2019. So this is what the economy looks like, and what the total transactions in the economy look like in the year 2019. The real world is much more complicated, detailed than this, but let's just focus our attention on this very simple SAM and try to understand what these figures mean. As I said, SAM is another description of, another portrait of the circular flow diagram. It brings together a lot of economic transactions and presents them in the form of a matrix like this, through which we can understand the interdependencies between all of them, between the production factors, activities, and final demand. Basically, this is macroeconomic knowledge, as you know. So we are connecting everything in an economy: production, how incomes are generated, and then how the income is distributed across the production factors, across the actors in the economy, and what kind of transfers are happening between different institutions and different actors, plus how expenditures are spent on goods and services. So this is what we usually can get from the input from the SAM. Just looking at the numbers in the SAM, you can also make some economic analysis. But the SAM is a very comprehensive data set, which allows for much more complex modeling, such as the CG. Okay, to summarize, a SAM portrays all economic activities in an economy. In a SAM, you see production, you see consumption, expenditure, you see accumulation of production factors, and you see distribution. So SAMs are very nice snapshots of an economy. So here is a very simple macro SAM, as we call in a table form. Look at the table in the slide. The SAM, the social accounting matrix here, as I said, is a square matrix. Here you see 5 rows. I'm skipping out the total rows and columns here. So you see 5 rows and 5 columns, and you will realize that the rows, the titles of the accounts in the rows, and the titles of the accounts in the columns are the same. So which makes it a square matrix. So every account, so whatever you see as the title is an account, and the social accounting matrix, so is an account, right? So there are 5 accounts here: 2 activities accounts, bread and milk; 2 factors accounts, capital and labor; and 1 final demand account, which is households. As I said, this is a very simple economy. What we see in this economy is a very simple production and economic activity in general. So imagine that this is a village, and imagine there is no government, so there is no external sector, so there's no government. So I think I'm starting to sing like the Beatles. Imagine there's no government. So anyway, or John Lennon. All right, so let's if you look at the SAM, this is a very, very simple economy where there are only 2 sectors, bread and milk. For simplicity, just for now, we will just remove this assumption later on in the next slide. Just for now, we assume that there are no intermediate inputs. I mean, there are no inputs used in production. Of course, this is not realistic, but let's start with a simple one. In this very simple economy, two resources are used for production: capital and labor. So those who own the capital are providing their capital services. Well, you can call them capitalists if you want. And those who provide labor services, they provide labor. This is workers basically. They provide their services in production. Okay, and as I said, this is a very small village economy. There's no government. Nothing is happening here in the form of investments, in the form of exports, imports. Nothing. So no taxes whatsoever. So in this very small closed economy, very isolated closed economy, households are consuming everything produced in this economy. So the whole consumption is realized by the households. Okay, this very simple economy, the transactions in this very simple economy can be organized in the form of a SAM, as you see in this slide. A very useful way of organizing the data or transactions in the economy is to organize them in the form of blocks. So there are so many accounts, as you see in the rows and in the columns, which are the same actually. So what we do here is we categorize them in the form of blocks. So you see 3 blocks here: activities block, factors block, and final demand block. This is just for convenience, and well, actually they all have there is a very meaningful reason why we do this, because CG model is going to be built on the idea of this categorization, as you see later on. So we will look at each of these numbers in a minute. The activities here are actually production activities. So the rows you see are 2 sectors: bread sector and milk sector. As I said, there's only 2 sectors here, and factors block is the production factors. These are the resources we have, productive resources we can use in production. So we will use capital and we will use labor in production. So capital, you can think of capital as something like machines, and labor as something like just workers, labor services. All right, and then in the final demand block, you will see there's households. As I said, the only actor in this economy is households, and everything here is consumed by these households, plus all these factors, capital and labor services, are provided by households. So you can think of households as owning capital and owning labor. Some of these households are working as workers. Some of them are capital owners. So capital owners are sometimes named capitalists, and workers are providing their labor services. So this categorization here is what makes a SAM look like this. So let's look at each block one by one. If you look at activities and activities block, if you look at the activities block, by the way, how do you read the numbers in this SAM? So if you go from left to right through a row, that means the flow of physical flow of what you see. For example, if you look at the bread row, this is the first row in the matrix. If you go from left to right, you will see a number like 15 at the far right. Right. So this row, if you go through this row, this means the physical flow of bread. So the rows here represent physical flows, or flows in general, and the columns here represent payments. So remember, if you go from left to right, that means flow, and if you go from top to bottom, that means payment. Okay, so let's look at the activity row. Activities block is made up of bread and milk sectors. If you look at the rows of bread and milk, the only number you see, if you look at the row, the only numbers you see is in the final demand is where the activities and final demand blocks are intersecting. You see two numbers, 15 and 35. This 15 and 35, how to read these numbers? So 15 means, remember, if you follow the rows, that means flow. If you follow the columns, that means payment. So bread, 15, households, bread and households. So you see, this is how you read the numbers. So 15 actually means bread, comma, households. This is how you represent actually the how you read the numbers here. So if you think of the rows as X and the columns as Y, like XY axis, very similar idea. Any point, any cell here, or any number you see in the table is basically represented in the form of row, comma, column. So when I say bread, households, I mean bread row and households column. And look at the this is just like Excel. Excel is the same, right? On the row side you see numbers like 1 2 3 4 5 5 6 7 8, and on the column part you see A B C D. So when I say A1 or 1A, which is row 1 and column A, so similar idea, just like a spreadsheet, Excel spreadsheet. This is how we actually read these numbers. So bread, households, milk, households. Okay, how to interpret these numbers, 15 and 35. So bread is flowing to households, and households are paying to bread sector. This is how you read the number here. Similarly, milk is flowing to households. Households are paying to milk sector. Remember, at the beginning of the first lecture, we were talking about the circular flow diagram, and there were two rows. There were two arrows connecting each actor in the economy. One row was physical flow, the other was monetary flow. Similar idea. So because the SAM is another form of showing the circular flow diagram with numbers, not a picture but a number, so the same idea applies here too. And 15 and 35 are what households pay to production sectors or activities. So households are paying to bread and milk, which means they are buying this final demand. This is consumption. Households are consuming bread and milk and paying 15, let's call the textbook calls this yen. So the monetary unit here is yen. So households pay 15 yen and to bread, and pays 35 yen to milk. Okay, this is actually, if you add these up, you get total household consumption or household spending, which is 50 yen, which is the total of the column, as you see in the far right column, total. Okay, so far we have been talking about activity and final demand blocks. If you look at the activity and final demand blocks, you will realize that the 15 and 35 are there. Okay, next let's look at, I'm following the same order of explanations in the textbook. Let's look at the activity factors and activity block. So factors are capital and labor, activities are bread and milk. So factors and activities, factor rows and activity blocks. So factor rows are capital and labor rows, activities are bread and milk columns. You will see four numbers, 5, 20, 10, 20, 10, 15. This is on the left, middle left part of the of the table of the matrix, and what these mean. So remember, if you look at the rows, you will see flows. If you look at the columns, you will see payments. So let's look at the interpret these numbers here, 5 and 20. For capital row, you will realize that while 5 and 20 is capital is flowing from capital is flowing to bread sector, and capital is flowing to milk sector, and the bread sector is paying capital 5 yen, and milk sector is paying capital 20 yen, which means for capital services, these two sectors are paying this amount. So they are buying capital services from capital owners, and capital owners, for capital owners, actually, this is what they earn. But for bread and milk sectors, this is a cost. This is how much they pay to employ capital services. Similarly for labor, if you look at the numbers 10 and 15, labor flows from bread. Labor flows to bread and milk sectors, and bread sector pays 10 yen for labor services, and milk sector pays 15 yen for labor. So this is how much they pay to workers in production. Okay, so this is factors and activity. Factors and activity blocks intersect in this part of the social accounting matrix. Okay, so basically what we see is here there's an exchange of production factors in the term for payments, of course, and these payments for capital, you can call it well, we called it in put up tables, we call this gross operating surplus, which is another form of which is another way of saying profits, or capital is earning rent. Okay, this is rent or profits or whatever you name it. This is the share of capital in the use of production factors. And then there is labor. This is total wages paid to workers. Okay, very, very interestingly here, that sum of the payments made to capital is 5 plus 20, which is 25, which is the row sum at the far right. And for labor, you see 10 plus 15, again 25, which is shown in the far right in the total part. Okay, row sums are equal here, which means capital is paid 25 yen, labor is paid 25 yen. So remember, we have no inputs in production in this very simple economy. The only cost of production is what you see here, 5, 20, 10, 15. Okay, so very, very interestingly here, the cost of production, or basically this is value added as we named it before, is distributed equally 50-50 or 25-25 in this case, between capital and labor. Well, very interesting. This is a very nice coincidence. That means probably both capital owners and workers will be very happy, and there will be not much of a dispute between them. Well, the real world might be different, but here you see a very nice picture. Okay, now let's look at the remaining block, which is the final element of households block and the factors block. If you look at the intersection of these two blocks, you will see two numbers. The factors are capital and labor columns, and final element is the household row. You will see two numbers, 25, 25. But this is the same thing as we mentioned before. So, how to interpret this? As I said at the beginning, the social accounting matrix works on the principle of double entry bookkeeping. So it's like just like an accountant does. The social accounting matrix is calculating all the transactions in an economy, putting it in the form of something like a accounting sheet like this. Okay, so the production factors here are paying households. Remember, households own the factors of production. Households are the owners of capital. Households are owners of labor, and they must be receiving some amount of money in the form of revenues actually from the supply of these services. When they supply capital, they receive 25. When they supply labor, they receive 25 again. We saw this in the factors and activities block in the left part of the social accounting metrics. What you see in the middle bottom part 25 is just like the reflection of that. And think of this as your textbook's explanation is very nice. I want to read from here. It will be very easy to understand if you interpret the factor rows or factor columns as a virtual management agent of factors. So it's like a virtual account here, what we see. But just to complete the picture or to complete the matrix. So this factor management agent is commissioned by other agents. In this case, this is a household to provide their factors to activity, which is bread and milk. So households are owning capital and labor. They are providing these services and they must receive this income. So this income they receive is factor income because their capital and labor are factors. So this factor income they receive must be shown in this social accounting metrics as a payment to households. Remember, payment is what you see when you go from top to bottom or in the columns. And because the factors capital and labor, remember these are the virtual agents of factors. So these capital and labor accounts in the middle part, the third and fourth columns, in the factors block, capital and labor blocks, they are paying to households 25. All right. So this is the final section of the social accounting metrics, which now wraps up the explanation here. All right. So far we have discussed what this simple sum here looks like, and I believe it is not very difficult to understand. If you find it difficult, please ask me when we have this discussion meeting next week on social accounting metrics and input-output tables. And I want you to remember the social accounting metrics very well, because this is what we're going to need the most when we start modeling our CGE model. Okay, one last thing about this social accounting metrics is that, as I said, it is a square matrix. You can now easily see that the column titles, which is the account titles of the accounts, and the columns and rows are the same. Similarly, the row sums and column sums are also the same. We saw something similar in the input-output table as well. If you look at the bread column, for example, you see the column sum is 5 plus 10, 15. And for milk, it's 20 plus 15, which is 35. And if you look at the activities block row, you will see that the row sum is 15, which is equal to the column sum, 15 again. And if you look at the activities row, bread and milk, it is easier to calculate the row sum here, because the only item you see is the household consumption, which is 15 and 35, which is already there, and the sums of the rows are equal to just these two numbers. Okay, how to interpret these? Remember, the columns represent payments. So bread and milk are paying to activities, factors, and final demand. So in this case, the activities are not paying to activities. If they do, this will be input demand, which we will see later in the next slide. If you look at the bread and milk columns, the 15 and 35, the numbers you see there, this is the payments. This is the sum of the payments made to capital and labor. Basically, this is the cost of production. So because cost of production is equal to cost of output, this is total output. So the amount of the value of output of bread sector is 15. The value of output of milk is 35. um, the factors block, you see the four numbers in the activities and factor, the intersection of these two blocks here, 5, 20, 10, 15. This is how the value of the output is distributed among factors of production. Okay, in the factors block, you see that the total, the row sum is 25, 25 for capital and labor, and similarly for the column sum. We have discussed this before, so I don't want to repeat again. Look at the final demand part. Final demand is households, right? In the column, you see households column is 15 plus 35, which is 50. Okay, households are paying to bread and milk, which is they are paying for consumption. So this is total household consumption. Remember, this is a very simple village economy. Everything produced is just consumed by households. Total consumption is 50. And you can also verify that the total supply in this economy is 15 plus 35, which is again 50. Everything supplied, everything produced is consumed by households. If you look at the final demand households row, you will see two numbers, 25, 25. Add these up, you will get 50. So the meaning of 25, 25 is now if you look at the row, remember rows are interpreted like the column sector pays the row sector. Okay, the column account pays the row account, which means 25, 25 in the last row means that households are receiving for the services of capital and labor, they are receiving 25 plus 25, 50 yen. This is their total income. So total household income is 50. Total household consumption we saw is 50. So households are consuming all of their income, all of their revenues on bread and milk. Remember, there's nothing else they can do because in this economy, there's nothing else. There's no investment, there's no export, imports, whatever. Okay, so I think this very simple social accounting metrics helps you understand the working of a simple, very simple economy. So I think I should stop here because before it gets too late, so I have time to discuss other slides. Here we go. This is a more complicated social accounting metrics SEM, which looks in its structure something like the previous simple SEM, but this one introduces, in addition to what we saw in the previous SEM, a bit more complication. Again, we have two activities only, bread and milk. Here it is abbreviated as BRD and MLK, just for convenience. Bread and milk sectors. Well, there's not much of a difference so far. Two factors again, capital and labor, again abbreviated as CAP and LAB. But now we are introducing the government, right? So the government as an actor. We are also introducing the foreigners or external sector in this economy. So now we're opening up this village economy so that there will be trade, there will be exports and imports. And in this village economy now there is government. Remember what the government does. Government spends, government also taxes, right? Collects taxes from other actors. Okay, and then what we do is now because the government can collect taxes, we just for convenience we here take out two specific taxes just for convenience out of the government account and put it in a different place. This is indirect taxes and tariffs. IDT and TRF, you see here the abbreviated form. IDT is indirect taxes. These are taxes taxes on production. We saw it in input-output discussion before. TRF is tariffs, which is taxes imposed on imports. Okay, with this, now we have three final demand accounts. Actually, by final demand accounts, we mean three actors. These are households, which existed before in simple SAM 2. Now we have two more actors, which are the government and the foreigners. Foreigners are actually taken out as a separate account here, just for convenience again. But we now add another actor into the economy, which is INV. INV stands for investment. So we take investment as a virtual agent. And this virtual agent, what this INV investment agent does is it collects savings from whoever saves, because in this economy we have three actors: household, government, and foreigners. They can save, and the INV agent, the investment agent here, collects these savings and turns them into investment. All right, so now we have three forms of expenditures then: household expenditures, government expenditures, and investment expenditures. Plus we have exports and imports. And you will remember from your knowledge of macroeconomics that these make up the components of the GDP. GDP is household consumption plus government consumption plus investments plus exports minus imports. All of these components of GDP are now in this social accounting matrix. Okay, now let's look at the activity factors, the indirect taxes, final demand, external. Let's look at the numbers here, because we have explained in detail in this simple SAM in the previous slide. I don't want to spend too much time on the detailed explanation of all these, but I want to spend more time on the new accounts which are included here. So the explanations about the remaining the same sections of the SAM as in the previous slide will be the same. Okay, now I want you to focus your attention first in the activity block. Okay, activity block and activity block intersect in BRD MLK row and BRD MLK columns. You will see four numbers there: 21, 8, 17, and 9. This is the upper left corner of the matrix. These four numbers. Well, you see that these four numbers are basically what we call input-output table, because bread and milk sectors are buying from each other. And remember, rows are flows. So 21 means bread is flowing from bread sector to bread sector. Okay, and bread sector pays 21 to bread sector. This is how you interpret this number. And bread is flowing to milk sector, and milk sector is paying 8 yen to bread sector, which means in the production of milk, 8 yen of bread is used as input. In the production of bread, 21 yen of bread is used as input. Well, these are the same thing, but bread is used as input here. Well, I don't. Please don't mind about whether it is realistic or not. This is hypothetical, so we're working on a hypothetical SAM. Okay, and then there's milk sector pays to milk again itself 9 yen, and finally bread sector pays to milk sector as input cost 17 yen. Okay, these four numbers, these four blocks here is the input-output table, simple input-output table of this economy. So you know that SAM, the social accounting matrix, includes an input-output table in itself. In the previous slide, the simple SAM, we didn't have this. We just assumed, remember, we assumed that there are no inputs used in production. But now it became much more realistic here. I mean, in this hypothetical form, now it became more realistic. Okay, next, please look at, okay, this is what you see in the activity cell. So activity row, activity column. Okay, now let's look at the indirect tax activity cell. So indirect tax rows, IDT and TRF rows, and BRD, MLK sectors. Okay, same here. Remember, the columns are interpreted as payments. So bread sector pays to IDT account 5 yen, milk sector pays 4 yen to the IDT account. These are IDT's indirect taxes. Okay, so bread sector pays 5 yen, milk sector pays 4 yen of indirect taxes, and similarly, bread the total tariffs in bread sector are 1 yen, and tariffs in milk sector are 2 yen. Okay, these are taxes imposed on production of bread and milk, and remember, these sectors are paying these. So this shows on the column side of the on the column account of these activities, but not in rows. Okay, and then in the upper part of the in the okay, if you look at the factor to activity accounts, we have discussed this before. So cap and lab, capital and labor, are flowing to bread and milk sectors. In this case, the numbers are a bit different than the previous one. Bread pays 20 to capital account, and milk pays 30 to capital account. So this is payments in these sectors to capital services, to capital owners basically. And then there's bread pays 15 to workers, and milk sector pays 25 to workers. Okay, let's continue our discussion of the activity here. Okay, look at the external EXT to activity. So activity block and external row. EXT is external, the foreign sector. So what you see here is bread is paying. So external is the rest of the world, I mean abroad. So bread is paying to other countries, and milk sector is paying to other countries. So bread is paying 13 yen, and milk sector is paying 11 yen. So when producers are paying to the foreigners, this means they are importing. So these are imports. Okay, imports are $13, 13 yen for bread and 11 yen for milk. But actually, total cost of imports for these sectors are basically because imports are also they're also paying taxes on imports, which is tariffs. Actual imports are actually 13 plus 1 for bread, which is 14, and 11 plus 2 for milk sector. But just for consistency, we just keep imports as the figures here. You see 13 and 11. Okay, this is what you see in the activity block columns. Okay, this is how we interpret the numbers here. Okay, next let's have a look at final demand columns. Okay, final demand columns, you see again shaded. Okay, these shaded these shaded areas are actually households, governments, investment, and there's also external sector here, EXT, and these columns are paying to activities, bread and milk. So households are paying to bread sector 20, and households are paying 30 to milk sector. Well, we saw this before. Again, these are consumption figures. So household consumption is 20 for bread, 30 for milk. Similarly, for government, it's 19 for bread, 14 for milk. These are government spending on these two products or sectors. So investment is INV. INV is investment expenditures. So in the investment, in the bread sector, the total investment expenditures are 16, and in the milk sector, total investment expenditures are 15 yen. Finally, external, the foreigners are now paying to bread and milk sector. So remember, when the bread and milk sector was paying to foreigners, we call it imports. Now foreigners are paying to the products of bread and milk sectors. Remember, these are domestic industries here, because foreigners are paying to domestic products. Well, when foreigners are making a payment to our products, we call them exports. These are exports. Exports are now $8 for 8 yen for bread and 40 yen for milk. Okay, so this is how we interpret the shaded areas in this social account matrix. Okay, now let's take a look at the other figures here. How about the final demand and factor cells? Final demand, household government investment rows, and capital labor columns. You see two numbers here, 50 and 40. Okay, in this economy, factors of production, capital and labor are owned by households. Well, you may assume that maybe part of it is owned by government. Well, you may say that, but here we don't assume that. We just say that the capital and labor services all belong to households. So some households are owning capital, some households are owning labor. Their labor is production factors, all right? So capital is paying to households 50, and labor is paying to households 40. Where do these numbers come from? Actually, if you look at the factor rows, cap and lab rows, you will realize that for capital, bread and milk sectors pay 20 and 30 yen. This is on the upper left side of the matrix on the factor rows. You see these numbers, 20 and 30. This is for capital. The sum of these make up 50. So this is capital payments to households. And remember, households are owning labor, and payments by bread and milk sector to labor is 15 plus 25. Okay, this is the fourth row on the left side of this table. So 15 plus 25 is 40. Now labor pays to households. Labor account pays to households 40. Okay, so this is the total factor payments made to households, paid to households. Okay, for the indirect taxes, again, okay, you see, well, what we're talking about is just double entry bookkeeping, just like accountants. Another example of this can be seen in indirect tax column. Indirect tax column IDT, TRF, well, these are paid to the government, remember. So, because these are tax items and these are revenues to the government, which means government row and indirect tax columns. So you see these three numbers, 9, and these two numbers, 9 and 3. Government row and IDT TRF columns, 9 and 3. 9 yen of indirect tax payments go to government as revenue, and 3 yen worth of tariff revenues by the government to the government. Okay, and now the remaining part is the right bottom part of the table, and you see there is here 4 figures, 23, 17, 2 and 12. Let's look at the 3 numbers here, 23, 17 and 2. Okay, 23, 17 and 2 are, let's interpret these numbers. 23 is what households are paying to government. Okay, household, remember, households column and government row, which means households are paying to government. Okay, so but households pay to government is just taxes. These are income taxes paid by households to government, which is 23. Okay, and then there's well, this is total tax revenues of the government. Remember, government has also other tax items, right? Indirect taxes and tariffs, 9 and 3. The sum of all these, 23, 9, 2, 9 and 3, make up 35. If you look at the row sum, you will see that 35 is total. Okay, now 35 is total tax revenues of the government. And let's okay. Well, if you look at the government column, final demand government column, you can also see what government does with this revenue. 35 yen of revenues is spent on basically 19 and 14, which is 33 actually in sum, is paid to bread and milk purchases. The government is spending on bread and milk. There's also two here. Okay, these two government, so investment to government, INV row and government column. These two. Two is government is paying to the investment account. Investment account, remember, this is another virtual agent which is turning savings into investments. Okay, now here is the remaining part, the remaining part of the social accounting matrix to explain. 17, 2, and 12. These are these belong to the INV rows and final demand and external columns. Okay, look at 17. 17 is households are paying to INV. Okay, so households are paying to INV 17, which means households are paying to this virtual agent, and the government is paying to this virtual agent, and this virtual agent collects these. So when there's a payment to INV, which means INV is collecting this money, and this money is now savings. Government is saving 2 yen. Households are saving 17 yen. Okay, 17 yen plus 2 yen. And then there's the external side. The external account pays 12 to investment. Okay, 12 means foreigners are actually also saving and paying to investment agent. Well, foreigners stay, but they are not members of our community or our domestic economy. So when foreigners are saving and we are using it in investments, okay, when you're using foreigners savings, basically you are borrowing from them. So this is actually foreign borrowing, or we will name it later on different way. This is called current account deficit. Anyway, when you're making use of savings, this form, now we have three savings, three sources of savings: households, government, and foreigners. The total savings here, IMB row sum, if you look at this, 17 plus 2 plus 19, that's 31. 31 is total savings in this economy. And total investments is in the investment IMB row, IMB column for bread and milk sector. So investments are on production, right? So our investments go to production sectors or activity sectors, bread and milk. Add these up, 16 and 15, that makes 31. 31 is total investments. The column sum, 31. And the row sum is IMB row, 17 plus 2 plus 12, again 31. Which means 31 yen is total savings, which is completely transformed into investments. Actually, you can also make a very simple economic analysis here, because households are providing 17 yen, government is providing 2 yen, which is 19 yen. But we have to find money for 31 yen worth of investments. Now we have 19. That means we have to find 12 yen, which is coming from outside. Okay, and this is basically the complete. This completes the story. But now I want you to look at the meaning of the row sums and column sums again. Let's get back to our discussion of the government. Remember the government row, the total row sum is 35, which is total tax revenues of the government. If you look at the government again, 19 and 14 yen, which in sum, this is 33 yen, right? Is spent on bread and milk. The government is buying bread and milk in this economy in the amount of 33 yen. But then, remember, the government's tax revenues are 35 and spends 33. The remaining part is 2, which is saving. The government saves 2, and you see it here in the saving part. INV, Gov. INV row, Go column, 2, which is there. Okay, this is how you what you can say about the behavior of the government. The government, how it allocates, you know how it collects revenues, from what sources, and now you know how it uses these revenues between spending and saving. Similar story for households. Households receive income, but how do you find that? Look at the row of households. Remember, households are owners of both capital and labor, and capital services earn them 50 yen, which is household HOH, household row. Look at the row. You see 50 on the, for cap and 40 for lab. Okay, so households are receiving 50 for their services of capital, 40 for their services of labor, which makes in total 90. The row sum is 90. So remember, this is total revenues of the government. This is total government income. And what do they do with this income? Of course, they will spend and they will save. How much do they spend? Let's look at what they do. Look at the household. Spending is payment, remember. So for payment, look at the column. Look at the households column. You see 20 and 30 spent on bread and milk. In total, well, this is 50. This is what they do, right? Okay, now households are paying to the consumption of bread and milk, but they're also paying tax to the government, which is 23. So 20 plus 30 plus 23, which already made 73 so far. What do they do with the remaining part? They paid to spend on bread and milk. They paid some to the tax, some to the government as tax. Now the remaining 17 yen in their pocket. Now this is their savings. Okay, and we talked about the activity production side. Now we're talking about the connection between income and the spending. All right. Basically, in this economy, total income equals total spending. But for the actors, for households, governments, even foreigners, the amount they are not spending from out of their income is their savings. Okay, now finally, I want you to look at external sector, EXT. EXT row is if you look at the final row here, the last row, you will see the external row. You will see two numbers for bread and milk. Remember, these were imports. So 13 plus 11, which is 24. 24 is the total imports in this economy. And now let's look at the EXT column. EXT column is here on the right side, the column, the last column on the right side. EXT column, for the first two numbers here, 8 and 4. For bread and milk sectors, which go to bread and milk sectors. These are exports. So now let's see, $24 of imports and $12 of exports. How do you pay for imports? Remember, imports are purchases from other countries, and you have to find foreign currency to pay for these. And this foreign currency usually comes from your exports. This is how you earn foreign currency. But you see here, there's 24 yen worth of course, everything here is expressed in the domestic currency, yen. Okay, 24 yen worth of imports. Now you have to pay for these imports. And all you have as export revenue to pay for part of these exports is 12 yen. Okay, now you have a deficit of 12, right? We call this current account deficit. Current account deficit has to be filled in some way. Okay, this if you look at the external column, the XT on the right side, if you look at down a bit, you will see that INV and external INV row, external column, you see a number 12. This is foreign savings. Actually, we are using foreigners' savings to pay for the imports. The deficit that we couldn't find is coming from outside. This is current account deficit, or you might just call it foreign savings. In the social accounting matrix framework, foreign savings is equal to current account deficits. Okay, what we have talked about so far is nothing more than some very basic macroeconomic identities. Well, maybe in a different way, in a using a different jargon, but this is just what we did. I just taught you macroeconomics in a different way, just using numbers, but no theory. If you want to put these into equations, it is also possible, and I provide a very short explanation in a slide, and you can check later on. Also, instead of putting numbers here, you might want to also view the social accounting matrix SEM, and you might want to show the meaning of each cell. Instead of putting numbers like 29, 80, you might want to put what they mean in the cell. This is also done in another slide. I won't be explaining those slides. When you have time, you can look at those. I just interpreted every cell you see here in this social accounting matrix in the slide. You're free to work on these in your own free time. I just showed you how to read these numbers, and you might want to speculate yourself on what these mean. Okay, here's one thing you might want to check out. We have talked about this in input-output tables before. Here, I want you to check out the total GDP here. I want you to make the calculations. If you can't, let me know. I will just work on it with you if you need help. But here is one thing you might want to find out. What is total GDP in this economy? Remember, total GDP is government consumption plus household consumption plus investment plus exports minus imports. The answer is 102. Please find and by yourself. You can do this by looking at the final demand blocks and the external row, which includes import figures, or you might do the same thing using factors of production block and indirect taxes. Remember, the sum of payments to factors of production and taxes also is total value added. This is a calculation of GDP from another approach. You will find the same number, 102. That could be fun. See for yourself. One important thing about social accounting metrics is that these are not readily available. Most often, you have to build these on your own. Well, you're not unlucky because you're endowed, you're blessed with a lot of economic data. As you remember, SAMs are built on input-output tables, and input-output tables are available for most countries. In our group of students, I think the only country which for which we don't have input-output tables would be maybe Capo Verde. sorry, George. You may have to build one for yourself if you need. Okay. Anyway. If you look at the social accounting matrix here in this slide, you will see some shaded areas, and you can recognize here that the remaining data are missing. This is what normally happens. So here, the data you see in the shaded areas here are all taken from the input-output tables. This is a hypothetical one, but most often the input-output tables offer us such data as you see in the slide, in the social accounting matrix here. What you can do is, first of all, we will use our knowledge of the social accounting matrix to fill in some of the cells that we need numbers in, and some other things we have two options. One option is we find these data from other sources. Okay, economic data are not only coming from input-output tables, but we have data from national accounts such as GDP accounts. We have data from household surveys. We have data from balance of payments. We have data from many other sources of economic data. So we most often combine all of them into a social accounting matrix. At the end of the chapter, you will find out that because these data are coming from different sources and maybe due to the data collection method or due to the differences in methodology, some of these data are not actually consistent with each other. What I mean is, if you put them all together in a sum, we expect a balance. I mean, the row sums should equal to column sums. So far, what you see in this table is, if you look at the activity accounts, bread and milk, the row sums 92 and 89 are equal to the column sums 92 and 89. But the remaining part, because the data are missing, you see the row sums and column sums are not equal to each other. For example, if you look at the factor account, you will see that factor rows for capital is 50, row sum is 50, and for labor it is 40. But if you look at the factor block, capital and labor, these are 0 because there's no data available in the column. So we have to solve this problem. And then similar story for indirect taxes. The row sums are 9 and 3, but the column sums, because you don't see any numbers there, is 0. So we have to ensure row sum and column sum equality here. And another problem here is at the final demand. Final demand rows are empty, and final demand columns, we have some numbers. These are consumption figures. So as I mentioned at the beginning, remember that these data are coming from the input-output tables, but we need other supplementary data. Supplementary data are coming from other sources, as I mentioned. But here we are very lucky because we are working with a very simple social accounting matrix. All we have to do is fill in the parts, the SAM that we need data for. Okay, you will remember that all these cells are not actually including numbers. Some of these cells are empty because there is no economic meaning whatsoever, right? So some of these are virtual agents like factor block. Factor blocks are capital block and labor block. This is just a virtual agent which is making payment to households for their capital and labor services. Remember the last slide, the explanations. And indirect taxes, a similar virtual agent. These are payments from the IDT and TRF columns to the government account. We are very lucky because we have the data on indirect taxes, tariffs, and capital and labor. So all we have to do is just fill in the gaps here. So this is the first step to do to balance our SAM. Okay, in the next slide, we're going to take a look at that. Now let's take a look at the problem here. Remember last time that we were discussing that the first gaps to fill in are about factor payments to household and indirect taxes payments to the government. So this is here shown in this slide, in this social accounting matrix. You see the factor column, cap and lab, payments to cap and lab to households. So this is household and cap lab cell. So household row and cap and lab or factor columns. So it's very simple. All we have to do is put the numbers here, which are available from the factor accounts, factor rows in the left upper left part. So if you look at the so we're not doing nothing more than just verifying what we have done at the beginning. We know the original SAM. What we're just doing is we just collected data in the last slide from the input-output tables. That's what we have in our hand. Now we're filling out the remaining gaps in the social accounting matrix. So the first gap we fill in is this: capital and labor payments to households. So if you look at and remember, in this economy, all factors of production are owned by households, so all payments are made to the households. If you look at the capital row, you will see two numbers. Bread and milk is paying 20 and 30 to capital, So it's in total it makes 50. Remember, this 50 now belongs to households for their capital services. The revenues 50, the sum of the revenues 50 now goes to the households. You see a cap column and household final demand. Household is HOH, HOH is row. You see the number 50. This is the shaded gray area. You see the number 50, which is coming from there. Okay, a similar story for labor. Labor also belongs to households. Households are paid an amount of. If you look at the labor row, bread and milk columns, you will see that bread pays 15 and milk pays 25 to labor. In total, this makes 40. 40 is now paid to households for their labor services. We put that 40 in the labor column, this time as a virtual agent and a factor block, and households row. Next to 50, which is for capital, we have now labor 40. Now, if you look at the cap and lab columns, because these are the only numbers we have to fill in here, the remaining cells, all the remaining cells in this column, cap column and lab column, they are empty. So we see that the total, the column sum for cap now becomes 50, and column sum for lab becomes 40. Okay, remember these column sums have to be equal to row sums. And if you look at the factor row, cap is row sum is 50, which is on the right side upper part column, right? The total column in the right hand side, the far right side in the 1, 2, 3, third row. The fourth row for lab, the row sum reports a number 40, which is also same as the lab column sum, which is the fourth column, and the total says the number at the bottom is the total for labor column, which is 40 again. So 40 and 40 row sums and column sums, 50 and 50 for capital, 40 and 40 for labor. Now we ensure that row sums are equal to column sums. So far we've done a great job for factors. Let's do the same thing for indirect tax and tariff accounts. If you look at the indirect tax and tariff rows, IDT and TRF rows, we can easily find out that bread is paying bread columns and milk column. If you look at the indirect tax IDT TRF rows, you see that bread pays 5 to IDT, milk pays 4 to IDT. This is the indirect taxes. Sum them up, you get 9. And for tariffs, similarly, you get 1 from bread, 2 from milk. In sum, that makes 3. So we have to put these. Remember, in the indirect tax column, IDT, TRF column, the only numbers you will see there is in the row for government. So IDT, virtual account, virtual agent, and virtual agent TRF is now paying to government for as tax revenues. So these IDT, indirect tax revenues, and TRF goes to the government account. This is the government row. Remember, the columns mean payments, and the rows are actually receiving these payments. So the government is receiving 9 from IDT account and 3 from TRF account. You can see these numbers in the second shaded area on the right side. So a bit which is next to the previous 50-40 numbers. So 9 is now paid as indirect tax to the government. These are tax revenues to the government for indirect in the form of indirect taxes, 9, and TRF 3. And you can easily recognize again, just like what we did for factor accounts, you can see that the row sum for indirect tax IDT is 9, which we originally knew from the beginning, and TRF is 3. And now, because these are the only numbers you see in the IDT and TRF columns, again, these column sums, 9 and 3 are equal to row sums 9 and 3. Okay, now is, you see, we have ensured that row sums and column sums are equal to each other for activity, factor, and indirect tax blocks. So the left part and upper right part of the social accounting matrix are now balanced. Which part is not balanced? We can see from final demand blocks. If you look at the final demand rows, you will see that you will see to now for household row sum, you will see a number like 90, but for the final demand household column, you see number 50. So 50 and 90, they are not equal to each other. Similarly, for government, column sum is 33, while row sum is 12. And for investment account, the virtual investment agent account, the row sum is INV, row sum is 0, and column sum is 31. Again, there's an imbalance. Finally, for the external account, there is a row sum of 24 and column sum of 12. So somewhere there's a problem, right? And the problem arises because 4 numbers are missing here. If you look at the original SAM in slide 3, you will see that households are paying taxes to government. Households are also households, government, and external accounts are paying to the virtual investment agent IMV. As you see, the numbers there, actually we will be filling in them right now. These are savings of these actors or institutions, as we name them. Okay, so now let's take a look at these. In the next slide, we will first start with the external account, because it seems easier to do that, because there's only one number missing there, and we can easily find out that one. And then we will move on to the other remaining final demand accounts. Let's move on to external, EXT row and EXT column sum. Remember, EXT row sum is 24, EXT column sum is 12. Let's see how we can balance this in the next slide. It is fairly easy for external account, because the only number missing is in the column. In the column of external account, you will see that the external is paying to INV. INV is the virtual agent which is collecting savings. So, as I mentioned earlier, not every cell in a social accounting matrix, not every cell in this table have values, and the only value missing in the external accounts, either in the row or in the column, everything in the row for external account is there. The only numbers you see is 13 and 11. These are imports, so these are already done. There's nothing else to write in the row for external account. But if you look at the external column, you see 2 numbers, activities 8 and 4. These are exports. The sum of these exports is 12, right? And the sum of the imports is 24. 24 is the row sum. The row sum here is total payments made to foreigners in this economy. That total payments made to foreigners is basically for their imports. So we pay 24 yen for imports. Now let's see what's happening in the column. In the column we see 8 and 4. Okay, the remaining part is what you see is there's a missing gap. The missing gap is now in the shaded gray area there. We have to put a number there, and that number is supposed to be it has to be 12. Okay, so we didn't put, because we didn't know it. Now we were lucky, because to ensure that rows and column sums are equal to each other, if you put a number 12 there, you can easily see that the row sum, which was 24, now the column sum also becomes 24. That means we balanced the external accounts. Okay, so what is the meaning of this 12? Actually, we discussed this before. Now, basically, this 12 is 13 plus 11, which is 24 minus 8 and 4. So this is 24 minus 12. Here is 24 is imports, 12 is exports. This imports minus exports. So imports minus exports is basically trade gap or trade deficit. This is trade deficit. When I say trade deficit, you expect a negative number, but remember, we're not talking about a trade number here, which is 12 is trade deficit. It is true, but the meaning of this number 12 here is external account is paying to investment account. Virtual investment agent is collecting savings. So external account is paying to savings. This is external of foreign savings. So we have discussed this again before. Foreign savings are basically foreigners' savings. We are receiving foreigners' savings in this economy, which means if you're borrowing from other countries, then we will be using their savings. So these are basically foreign borrowing, and we tend to call this current account deficit. Although the name is current account deficit, we just interpret it as foreigners' savings. That's why we see a positive number here. So that's the missing part for external account. And now we can move on to final demand blocks. So far, we have done so many things here to balance the SAM. Now the household, government, and investment accounts seem to be unbalanced, because in the household account, if you look at the row, you'll see number 490, but in the column sum you see 50. For government, the row sum is 12, while the column sum is 33. And these are the two for the INV part. We also have a problem here. The INV row sum is 12 and the column sum is 31. Okay, the remaining two numbers we will soon see in the next slide. If we fill in these two figures, then everything will be perfect, and we will have a perfectly balanced SAM. The remaining two numbers are household and government savings. Household and government savings are household column, and government column is paying to INV, virtual investment agent. So this will be on the same row as the shaded 12, number 12, figure 12 here, because these are foreigners' savings. Household and government savings will be on the same row, but to the left on the column for households and the government. We will soon do that in the next slide. Now we're ready to complete our SAM by filling out the remaining missing numbers. Actually, I forgot to mention that there's also another number we are missing here, which is the households' payments to the government in the form of taxes. So if we add these three numbers, then everything will be fine. Okay, so let's. This is the shaded area here in the gray zone. The numbers missing, I think we need a strategy for this, because there are two numbers to fill in the household column. You see, we want to ensure that the number, the totals, the row sum for households 90 is equal to the column sum, which seems to be 50 here. The remaining two numbers here in the household column, we need two numbers, and apparently these two numbers should add up to 40, so that the number 50 becomes 50 plus 40, 90, which will be equal to households, because there's nothing else to do in the households row, because no number is missing there. We know the row sum is equal to 90, and row sum for households, basically this is household income. Okay, now we know that the households have an income of 90. What do households do with this income? Well, we see from the row here is that from the column for households, we see here that they are spending 20 on bread, 30 on milk, so 50. So they are paying 50, which is actually the column sum. You see, that's for now. We know that they are spending 50 yen of their income, which is 90 in total, on this. So now they have to pay tax to the government. They have to also save out of it. How much do they save? We will soon see that. Okay, if you look at the government here, there are two numbers missing, both in the column and in the row. The number missing in the row part is households' payments to the government. Actually, this is households' taxes. This is missing, so we have to fill in that. I actually talked about this in the household part, right, and then and the other number missing for government is in the government column. Government is paying to IMV, the virtual investment agent. Remember, this is the agent which is collecting savings from the household, governments, and foreigners. So, we have to find out the total savings of government, and then if we add these up, then in the row sum we see for government a number of 12, and in the column sum we see 33. We have to make sure that these are equal to each other. So let's see what we do to balance the sum. And when we finally put all these three numbers, then we will have a perfectly balanced sum. Let's move on to the next slide. Okay, now we came to the most important and probably the trickiest part. Here, in the household column, you see that we need to fill in two figures. One for taxes, one for savings for households. Okay, that is the household column, and you see a number that 23, and you might wonder where that comes from. Okay, the thing here is, well, first of all, we want to ensure that the household savings and household taxes to the government are added to household consumption, so that this total savings plus household consumption plus taxes to the government, these make up the total revenue or total income of the households. We know total income is equal to 90, which is equal to the row sum for households. All right, so 90, we know that the household is now endowed with an income of 90, and we know now that 50 of this 50 yen is spent on consumption of bread and milk, and what happens to the remaining 40 yen? Okay, this 23 comes for no reason. Actually, we just find this number by looking at other data sources. While we are assuming that this is a real economy. So this 23 households are paying to government in the form of taxes. Okay, this number usually is obtained from government revenue statistics. Okay, in a real world example, we will be looking at how much income tax is paid to the government and how much tax payments were made to the government. And we're not talking about indirect taxes and tariffs here. This is another tax item for the government. Indirect taxes and tariffs were paid by the production sectors already. Activity accounts 9 and 3 in the row sum for government is actually coming from that. But for the households, this is the last tax item in the government row, and 23. Well, just 23. We will just assume that we get it from statistics. Okay, so 23 is not calculated using any of the numbers you see in the non-shaded areas. This is coming from outside. Okay, once we know that, our job becomes very easy. So we have to now look at the new column sum. The new column sum is 73 for households, but the whole column sum must be equal to 90. So what is missing is the number below 23, which is household savings which is going to the INV virtual agent investment account. So let's see what happens then. This is going to be the next slide. This slide is just a replication of slide number 3, which is the original SAM for our standard model. Okay, so what we did in the last slide was we put the number 23. Now all we have to do is, okay, if you remember, the column sum for households in the last slide and this unbalanced SAM was 73, and for household column. For household row, it was 90. the difference is 17. Just put 17 in households to IMV household column, IMV row. Just below 23, you will see the number 17 there. So the row sum now 90, which was originally established, and the column sum now becomes 90. And now we are done with the household account. And the last number to fill in is government to investment. If you look at the investment row now is after you put number 17 household savings. Now I want you to do it on your own. It is not shown in this slide, but if you look at the new row sum for IMV now becomes 29. All right, 29 is the new row sum for IMV row, and for the IMV column, we already know, because there's no other number to put in the IMV column here. IMV column is 16 plus 15, which is 31. Remember, the 16 plus 15, these are investments. Total investments in this economy is 31 yen, and these investments are now financed by the savings in this economy. And the IMV column sum 31 must be equal to IMV row sum. For the moment, it is 29, which is 17 plus 12. 17 is household savings, 12 is foreign savings, or which we also named it current account deficit just a couple of minutes ago. Now the difference is 2. 31 minus the new row sum 29 is 2. 2 is the missing number. We have to put that in IMV row government column cell, which is government savings. If you put the number 2, you will now have a row sum 31, column sum 31 for IMV account. Now you complete the picture. You have a fully balanced SAM. Congratulations, you just made your first balanced SAM from a mix of a lot of statistics numbers which you found from different sources. Okay, we just assume that these are real world numbers, but when you have when you want to build a social account matrix on your own, the first thing you will do is get the input-output table data, all the data about intermediate inputs, all the data about indirect taxes, tariffs, imports, exports, and consumption of households, government spending, investments. All right, the remaining data in the SAM will be coming from the public finance statistics and balance of payment statistics and flow of funds statistics, national account statistics. So all these data are coming from different sources. You might even use data from household surveys or even insurance on insurance statistics. They may have social insurance statistics, for example, may have data on different kind of data you might need in a SAM. So your task is going to be to now balance these numbers in a way that row sums and column sums are equal to each other. And this is the last thing about data you will do before you run your CG model. Now that you have a social account matrix, you can start building your own CG model and replicate the working of this economy, which we will name calibration. Okay, this is the end for social account matrix. In the next slide, rather than using numbers, we are looking at the meaning of the figures here. I want you to take a look at it in a bit, and I want you to confirm that what you learned about social account matrix is actually making sense to you. So next slide is going to be the descriptive interpretation of the social account matrix. And in the next slide after that, there will be a bit different format of social account matrix, which a lot of analysts are using, but I'm just putting it for reference. We will be working on our own SAM. Okay, you don't have to build a SAM for your intern project. I will give you the SAM. And luckily, so many people have been doing so much research about social accounting matrices, CG analysis of developing countries. So we have a huge amount of social accounting matrix in balanced form available for many countries you can think of. These are for developing countries, and you don't sometimes have to build a SAM for your own, right? So thanks to so many researchers doing research on this. Okay, I might have some suggestions to you if you're interested in using SAM or CG for your own research purposes, or for your research maybe in the future. I know some platforms, some research institutes which are distributing freely or at a very low cost the social accounting matrices. Maybe in the coming weeks I might put a list of those places where you can download, you can get the social accounting matrices maybe in a slide or two. Okay, let's move on to the next slide. So this is a descriptive SAM which shows the structure and in text rather than figures. So I want you to notice that this is nothing more than another way to show the circular flow diagram, which we discussed at the beginning of the course. So most SAMs look like this, although there are some differences. The next slide, which I'm not going to talk about, is a slightly different form of a SAM, which is a bit more complicated. You might see this kind of SAMs also being used in other research papers. That includes more sophistication to our simple SAM. So what we're going to do, so you're free to check out slides number 11, 12, and 13 on your own. These slides basically, they look at the same circular flow diagram but put in different forms. So slide number 12 and slide number 13 are actually belonging to a real country case, Ecuador, for the year 1980, which I actually borrowed from another research paper. So that is what we do. This is what we do in CG modeling. Okay, this is the last thing I want to talk about for SAM. Remember, this is the with figures, of course, with numerical values. This is the data set we use in CG modeling. After you're done with SAM, if you understand the structure of the SAM, then the next thing to do is put the behaviors of these institutions. So if you look at the final demand block, you'll see households, government, and also on the external part, also the external sector. So these are named institutions in an economy. For IMV, the virtual investment agent, which also acts like an institution. So when we use the word actors in an economy, basically we mean by actors we mean institutions. These are often used interchangeably, meaning the same thing. The main actors or players in an economy. So so far we have been dealing with input-output table and SAM. Next thing to do is to work on a simple CG model. Okay, the simple CG model is shown in chapter 2. We will be using that simple CG model, but to run a CG model we need numbers. The numbers we're going to use are going to come from the simple SAM we have been discussing in this lecture. So before going into details of the equations to write and to understand in a simple CG model, I want to spend some time next week on how to write the programming code on GAMS. So I will soon send you a, a message about how to download and how to um, get the free license for your GAMS software. And having done that, I will show you some very important and basic programming techniques. Actually, it's not a technique, as how to write a code on SAM, how to write the code on GAMS. But first, we have to know some technical details about what to do in this GAMS software, right? And then after that, I will be discussing with you the CG model structure, which requires a bit knowledge of economic theory. We didn't talk much about economic theory so far, because economic theory is about behaviors of the actors, behavior of the firms, behavior of the households, behavior of the government. So behavior of firms, behavior of activities here in this case, behavior of activities, behavior of households, these are all coming from microeconomics. And microeconomics provides us tools about how to model these behavior of these actors. For example, in the case of households, we want to know what they do, why they consume. The ultimate aim is utility, but because they want to get this utility, high utility for their consumption. Okay, we will take a look at how to do that, in how to represent that in a CG model. And then we want to know the behavior of the firms, which means how they combine these production factors, capital and labor, to produce the output. Well, we call that production function. They're aggregating all these inputs to make an output, and they're using another input, intermediate inputs, outputs produced by other sectors. So we will spend some time on the theoretical part of CGE, and then the rest of the course we will be doing most of the technical part. I'm sure that you're more interested in the simulation and other policy analysis parts. But before doing that, we have to make sure that we understand the theory. We have to understand the data very well. We're done with data. Next, programming, and then theoretical explanation of the CG model, and finally working with our numerical data set, numerical model, and running our model, making it work, then finally simulation exercises. Okay, so I want you to master the input output and SAM and the properties and characteristics very well before moving on to CG. So that's all for lecture 2.